Hey, what's going on, guys? This is Terrence Ray, and back at you with another stock market update with the weekend version, where I go over, what, my outlook for the week, and I got a little topic I'm gonna go over, a little brief topic, talk about Fibonacci support and resistance, and how I find that. So right away, let's talk about what we can expect in the S&P 500. The expected move for the week is, I will say, we'll call it $66. We come to the option chain for the week, $65.96. Now, depending on how the market opens up tonight or this evening in the futures market, we could see that change. But I generally like to go off the weekend numbers because a lot of times it'll fall in line with that anyway by the end of the week. So we can roughly estimate about $66. So looking from where we are right now, we can see we've gone up in a straight line since the down move, right? Like literally, if we count this green candle, we count a high. So one high, higher high, two higher highs. Now this one didn't quite make a higher high. So if we started over, we go. But if you counted these candlesticks from, like, say, from the bottom here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, and only one of them not making a higher high, we are due. A lot of times for me, I look right around that 6 to 8 candlesticks of straight ups. I start looking for a down. Uh, and and if we were to, now I'm gonna bring my indicators back on. And if we look at them, we will see that on the RSI, we are not overbought on the daily. Now I'm gonna click and go to like an hourly. We'll see like intraday, we are overbought on the RSI. And I got a right here over here to the left, it's showing red, like I have the numbers of 76. But if I wanted to, I could come over here and you can look and see. Um, if we pull up the SPY, you'll see right here we are overbought on the RSI. You can see right here down here on the indicator, silver bar, and you can see right here. Now this to the right, I'll use this volume profile. Generally, I'll use it like on intraday, and I just have this. Sometimes I'll look at it, just showing you instead of seeing your volume down here, showing your volume up here, and you can see where your consolidation areas are. And you can see right here we in an area, so I expect a little bit of a pullback this week, maybe Monday or Tuesday. Maybe not a whole lot. Could pull it back right here to this little level, this intraday level right around in here. It may even come back down in here and fill the gap. So I wouldn't be surprised to see a little bit of a sell off, maybe a lot of a sell off. It just depends. Ultimately, I would think that this will continue to go up. Uh, we got a gap right here. I would think that it will probably go up to make all time new highs sometime let's see, today with tomorrow being the 19th, maybe by the end of the month, which maybe we'll be at all time highs again, barring something happens geopolitically, right? And I just have, and one of the reasons why I'm saying that is I'm getting ready to pull up Meta. Now, I'm going to show you in Meta. We're going to talk like Fibonacci. I'm going to take off. We'll remove the indicators, make this a little bit easier to see. And let's draw out some. Let's look back. Now, if we pull this over and we look, now you can see we had this big gap up right here. And it looked like Meta was trading. This is a daily chart. And you can see Meta trading within a range, bouncing back and forth, right? Now, if we look up here, this last time it hit down here at this trend line, we got something like a bull flag, like we got a low, then a high. And then this pullback right here was right in the middle of this range. Now, if I threw my retracements on, you would be able to see that it retraced in between 38.2 and 61.8 on your Fibonacci retracements. And that's my sweet spot. And then it gapped up right here. So if I take Let's just take the drawings out, make it easier to see. We got a gap up right here, and then it took out this high. Now, once it does that, I will throw on a Fibonacci extension. And you can see where we are right now. We're right here at a level. Like, I mean, it hit right there at the level and then acted as resistance and it turned back. So we got a down day on Friday. Now, even without this Fibonacci level, I still would expect with a touch, a touch, and a touch, and a touch. Now, if we were down here at the bottom, we already got 2 touches on these lines. I would expect for it to break out, just like I expect for it to break out here. Same, like similar to coin. I'm gonna go to coin. Yeah, let's see. Let's throw coin up there real quick. Just like similar to here, you get 2 touches on the third. It went through. 1, 2 touches on the third. It came down and went through. Right now, it can come back through. I do think that once it makes those highs on Meta, right? I do think it'll come back through. But I think on Meta, we could get it to see it break through here and possibly break through this level, but I think it'll get at least up here to around 570 before it turns again. Now, that's on the daily chart. Because a lot of times, now how I count when I use Fibonacci extensions, I count waves, just like Elliott. I count Elliott waves. So for me, and the way I do it will probably be different than a lot of people. Um, I'm going 1, 2, 3, and then you got 4 like this in here, like kind of like sideways, and then it'll probably continue over into here, and that last fifth wave will be a push higher. Right now, let's go to an intraday chart, and I'm getting ready to show you how that is on an intraday. Check it out. Same thing. Let's tighten this up. Now I want you guys now pay attention. I'm gonna take this volume control off, hide that. Excuse me. Now down here, this is the same thing. You see how we got this long wick of a candlestick? Matter of fact, let's hide. Uh, Matter of fact, let's go back here and put it on the main screen. And let's take it back off. Look the same, but a little bit different. Because now I can move it around. Let's go. Let's make it about. All right. Zooming all the way out. And I'm going to draw it down here. Now, this is an hourly chart. This looks the same way as it did on the daily. You see how we got the up move, the pullback, and it took off just like on the daily chart, right? But this is an hourly, this is an intraday, and we're going to get the full on the intraday. It tends to, that I find, to hit all of the levels to the upside and the downside. Watch. Low, high, low. You see where it ended up? Now I never count to the 461. I just kind of leave that. That's almost there as like a anywhere within that zone is why sometimes I'll short without even, I'll just short it once it get up there. But you see, you guys see how we had the 1, the 2, and then it broke up. Now you can see every level that it hit going up. Look, acted as resistance, the 100. Even the 61.8 right here. See, it chopped around in here and waited. Then hit here, pull back, right? Let's go over here. It gapped up past 161, 261, hit 361 right here, pulled back, and then 161 acted as support, came back down, gap down, but it never, as long as, so the sequence is still alive until it takes out the beginning point. Here's your beginning point. Until it takes that beginning point out, the sequence is still alive. That's your A or your 1. Now look, up, up, 361 again. This is chopping, gapped up, hit right here at the last level. And look where we are. Gap down. And on Friday, it looked like it was making a move to the downside to go lower. You guys see? So even within, now let's go back to the daily. Even within this range on the daily, we had stuff going on the hourly. So a lot of times, and I did some trading on Meta within that, right? When you can spot those, and that just comes from years of looking at charts, literally years looking at charts. I can just see stuff, the beginning of moves, and jump in a trade real quick when I see those. I'm looking for either it's better in my opinion to trade them to the upside. The market generally goes up more than it goes down. That's just a fact. The market has a positive drift to it. So the bull patterns play out better. The bear patterns play out faster, but they don't always hit all the levels. So like even let's pull up, let's go look at the SPX. Let me see if it's gone. Matter of fact, let's do it like this. I don't even know if I got it. If I got it up on here, yes, I do. There we go. So this was the major move to the downside that when it started back here, look where it hit. It got all the way down to the 2618 and wicked, and that acted as support, and then the up move ensued after that. So to the downside, you don't always get all the levels. So a lot of times I won't trade all of these. If I get in right here, you know what I'm saying, and I hit the 1618, I probably would have I take profit. Right. I won't even, if I see it break lower, then I may trade it to the next one. Now, if the market would have came back down here and took out this low, then yeah, I would have traded down and went for lower ones. And I use different charts, different indicators during different times of the market I use this one. This is an easy wave count, and these indicators are easy to do it. But sometimes you're not able to spot. This isn't a great um, counter trend trading setup. So I won't use it for counter trend trading. But hey guys, hopefully you got something out of this. Hit the like button, hit the subscribe button. Let me know what you think. Let me know if you need some more explaining on Fibonacci setups and support resistance and things of that nature and some of my indicators. And I'll do videos on those to help you out. With that being said, I'm going to be out. Peace.